So I received a comment on one of my social media videos about a couple who are self-employed applicants looking to see if they can actually get a mortgage. Now I'm going to answer their question in this video, but please remember this video is not advice. It's just a hypothetical scenario. I have not met these clients. I don't know their exact ins and outs. So in terms of, don't know their full income details. I don't know their credit history. I was going to give you a specific scenario in terms of what they've described to show you what type of mortgage is potentially available. So this is the message that I received. Great video. Thanks for the updates. I've got a quick question. I've been having a dive into applying for a mortgage as a first-time buyer recently along with my partner. We're both self-employed and we earn a combined wage of around £40,000, which has increased every year for the last 4. Savings of around 3k and a deposit of about 10 to 20k ready to go. Do you think it's possible to secure a mortgage on that kind of wage and savings, etc.? What kind of mortgage would potentially be the best one for us? There are so many questions, yet such little answers online. So what you're seeing here is an actual mortgage affordability calculator. So this is for NatWest Bank. There are many different mortgage affordability calculators out there. So what you may see here as the maximum loan may be potentially different with another mortgage lender. But please remember, we're using hypothetical scenario here. So from the message, I was told that they've got about £20,000 deposit. Let's assume they're looking to purchase a property worth £200,000. So they need a 90% loan. And then they need a loan of £180,000 from the bank. They are really young, so want the maximum mortgage term available because the rates are quite high right now. So they want the lowest monthly payment and they've got no kids. So what I've been told is that their combined income figures are £40,000. What they may not know is that lenders typically average the latest 2 years income figures. So assume that they've both got an equal income of £20,000 each for the latest year. Now, previously, if the previous year was £15,000, then what the lender will do is they'll do £15,000 plus £20,000 is a total of £35,000 over the last 2 years. So for these clients, let's assume that an average of the latest 2 years is £20,000 each. Assume they've got no debts, no loans, no credit card balances, completely clean credit, no adverse credit either. So what this lender is saying is they can borrow up to £178,000. So you can see from the hypothetical scenario we've run, the maximum loan is £178,000. So the clients are about £2,000 short. Now, let's flip it back to the affordability calculator. You know, I mentioned that lenders typically average the latest 2 years income figures. So let's assume that for the previous year, their income was £15,000 each when they're both self-employed, and the latest year is £20,000 each while they're both self-employed. So that's a gross income of £35,000 over 2 years. Divide that by 2, that'll give you £17,500. So let's see what the affordability calculator says. So you can see here still a loan of £180,000, but now we've averaged the latest 2 years income figures. So previously it was £20,000 each, now it's £17,500 each. So what is the maximum amount that they can borrow? £155,700. So that's not going to get them the loan amount that they need because they need £180,000 to get that property that they want. So in response to the comment, whilst I appreciate many people want to take a dive and try to get their mortgage approved themselves, it's not as straightforward as what you think. So for example, for the self-employed income, lenders typically average the latest 2 years. Now, from that message, there's so much more that goes into it. So what lenders will look at is if you've got any dependents, if you've got any credit card balances, if you've got any personal loans, if you've got any car loans, if you've got any nursery costs, what is your credit score like? Have you ever had any late payments? Have you got any adverse credits, so like defaults, CCJs, or what's your age? Because lenders will cap the term to your age. Typically, lenders will even let you take the mortgage to age 70 or age 75. So there's so many different variables that go into how much you can borrow as a mortgage loan. It's not, unfortunately, as straightforward as this is how much I earn, how much can I borrow? So if you want to know exactly how much you can borrow and most likely get your mortgage approved properly with an expert, then you need to speak to a broker because they are the experts in the field. Lenders change their lending criteria all the time. So what you may qualify for today, you may not qualify for tomorrow. And every lender has a different lending criteria. So it's your broker's job to find you the best lender according to your circumstances that's going to give you the loan amount that you want. And ultimately, once you get that loan approved by the bank, that will ultimately get you the house that you want. Because without the mortgage loan, the majority of people just can't go ahead and purchase the property outright. So you need to make sure that the lender that you choose or the lender that your broker chooses is the correct lender for you. I hope this video has answered the question that you've asked. If you've got any further questions, please leave them in the comments.